Top business news now. Brian Quinn is with us. As we said right at the top of the bulletin, he started with that landmark free trade deal between the European Union and Australia.
Stuart, 8 years in the making, apparently worth the wait. The agreement sealed by EU Commission President Ursula von der Leyen and Australian Prime Minister Anthony Albanese is set to remove nearly all tariffs between the two economies. The deal will save roughly €1 billion in import duties each year. Last year, the EU exported €37 billion worth of goods to Australia. Officials expect that figure to rise by roughly one-third, adding around €4 billion to the bloc's GDP by the end of the decade. Canberra, meanwhile, hoping for a boost of 10 billion Aussie dollars per year after nearly a year of mercurial tariff policies from the Trump administration. Europe seeking to reduce its reliance on the U.S. for trade, strengthening its relations with more reliable trading partners, including South America's Mercosur bloc, India and Indonesia. Brussels has signed trade deals with all of them over the past year. Australia, too, looking to diversify its export markets as a hedge against trade turmoil. Here's Prime Minister Anthony Albanese.
This was a logical step for two natural partners. But as we know, it was not inevitable. It took hard work and it took constructive engagement, and it required both sides to see the bigger picture, the wider horizon of shared opportunity.
Yeah, Brian, as the Prime Minister alluded to there, was it smooth sailing to sign this deal?
It was not, Stuart. Australia in particular had been pushing hard for more of its agricultural products to be included in the deal. That is a sensitive issue for Europe, though, especially following massive pushback from European farmers to the Mercosur deal signed earlier. Australia had wanted a duty-free quota of 50,000 metric tons of beef. In the end, Europe agreed to just over 30,000. There's an even wider spread for lamb, with just 20,000 tons coming in under quota. The EU actually runs a significant trade surplus with Australia. Last year, its agricultural exports to Down Under topped imports by nearly €2.5 billion. Australia, though, will now get to export its massive mineral output to the EU duty-free. The country accounts for more than a third of the world's lithium. That's crucial for electric vehicle batteries. It also produces 61% of the world's bauxite. That's a key precursor for aluminum. The EU trying to reduce its reliance on China for critical raw materials. Here's EU Commission President Ursula von der Leyen.
Getting China right is a strategic imperative. We cannot be over-dependent on any supplier for such crucial ingredients. And that is precisely why we need each other. Our security is your security.
And we'll have the reaction to all of that, in fact, from our correspondent in Brussels, Dave Keating, in around an hour's time. So stay with us for that. Go and check in on the markets now, though. How are they holding up so far?
Crude oil prices back on the rise Tuesday as traders remain skeptical of Donald Trump's claims that negotiations to de-escalate the Iran war are underway, especially after Tehran refuted those claims. International benchmark Brent crude trading above $102 a barrel. Its U.S. counterpart WTI north of 90 a barrel. Asian stock indexes gained some ground on the heels of Wall Street's relief rally Monday over those Trump claims. The Nikkei in Tokyo closing up 1.4% as new data shows Japan's headline inflation rate cooling in February. Fuel subsidies and stable food prices helping to keep price rises under expectations. The Kospi in Seoul up around 2.7% at the close. Here in Europe, major indexes are opening cautiously higher as investors hold on to a vague hope that that war could soon wind down, a residual effect of the so-called taco trade, for Trump always chickens out. Iran's parliamentary speaker, though, dismissing Trump's comments as fake news. Investors clearly staying wary as analysts say market volatility is likely to stay high for some time to come.
Judging from the fact that the VIX index, the so-called fee gauge, remains elevated at above 26 level. So this reflects that investors remain jittery in the near term, still watching closely the development in the Middle East.
See how that develops, Stuart, with that 5-day deadline. Investors clearly taking it with a grain of salt.
Indeed. Brian, thanks very much. Brian Quinn there with the business news here on France 24. Going to go to the